How is money created? Where does it come from? Who benefits? And what purpose does it serve?
What is a money system? What is the money behind the money system?
For centuries, the mechanics of the monetary system have remained hidden from the prying eyes of the populace. Yet its impact, both on a national and international level, is perhaps unsurpassed. For it is the monetary system that provides the foundations for international dominance and national control. Today, as these very foundations are being shaken by crises, the need for open and honest dialogue on the future of the monetary system has never been greater.
This economic crisis is like a cancer. If you just wait and wait thinking this is going to go away, just like a cancer, it's going to grow and it's going to be too late. What I would say to everybody is get prepared. This is not a time right now to wishful thinking the government is going to sort things out. The governments don't rule the world. Goldman Sachs rules the world.
The government cannot allow the banking system to fail, because if it did, over 97% of all money would disappear. This is why, in the event of a crisis, the risk is transferred to the taxpayer. But even during normal times, banks receive numerous guarantees and benefits beyond the right to create money.
Bill, by the way, I know the Bank of America is a very big bank. It happens I've got $32 there myself. Now, just between us, what assurance do I have that this money is safe?
Well, all deposits up to $10,000 are assured or insured by the federal government in Washington.
That's my guarantee. Huh?
Yes.
Have you heard that the federal government is about $280 billion in the hole?
The Spending Cuts agenda is an attempt by the government to shift debt from its account to that of the public. This is the government's response to the bank bailouts and is necessary in a debt-based monetary system where increased purchasing power is the result of growing debt and where a diversification of debt provides overall stability and market confidence. Policies such as student fee increases and the privatisation of public services, assets and industry follow the same model.
The problem we're facing, I think, is that there's this transference from the public debt to the private debt, which is essentially a way of transferring risk, actually, away from sort of UK PLC and the government onto the heads of individuals, and it's going to be the most vulnerable individuals who are going to have the most debt. Thus, it's a very unprogressive, regressive policy framework that the government's embarking on, where the risk is moved onto those who are most vulnerable. And if there is another financial shock, if there's an oil shock, for example, the people who will pay the penalty are the poorest people in society. Or homeowners, for example, who will fall into negative equity if interest rates go up even 1 or 2%, there'll be really big problems. So I don't think it's a sensible way forward at the moment at all, and it's regressive, and it's certainly not fair in the terms that the government's talking about, and it's certainly not a case of we're in this together.
As more of a country's resources and industries are privatised, the private sector takes on more debt. As a result, more money is created, and there is a boom. Some private equity companies have taken this theory to the extreme, engaging in a practice known as a leveraged buyout, where a company is purchased at an often inflated price, and the purchase price is transferred to the business as a debt. The company becomes responsible for the funding of its own purchase. These debts are often so great that the company needs to reduce staff, salaries, and research activities.
When you have to factor interest as a business, if you have to factor interest repayment into your goods and services, then you have to charge a perpetually higher price as you take on more and more debt.
An increase in the diversification of debt results in an increase in the money supply. When the money supply increases, more money is available for productive activities and consumption, which is the condition for a boom.
It's questionable whether we're going to get out of this recession or whether we'll just keep ticking along the way that we are now. However, if we do, then when we come out of this recession, when growth starts again, look at what happens to debt. It will rise and it will keep rising, and the faster the economy is growing, the faster the debt will rise. And then give it another 3 to 5 years, we'll be back where we were. You know, the debt will become too much, people will start defaulting again. It's kind of the system that we're locked into now, is we can't grow the economy without growing the debt, and the debt is the very thing that will bring down the economy. The only option going forwards is to reform it, to stop banks from creating money as debt. By fixing the monetary system, we can prevent the banks from ever causing another financial crisis. And we can also make the current public service cuts and the tax rises and the increase in national debt unnecessary.
The current monetary system allows the banking sector to extract wealth from the economy, whilst providing nothing productive in return.
I mean, why is it that we've got all this technology, all this new efficiency, and yet it now requires 2 people to finance a household, whereas in the 50s it only needed 1 person working? And the reason for that is not because these washing machines and everything are more expensive, it's because of all the debt. And it's because effectively the banking sector is creaming it off from everybody else. So a growing banking sector isn't a sign, it's not a good thing. If the banking sector is growing, it's either that it's becoming less efficient or it's becoming a parasite on the rest of the economy. And that's, we can talk about the banking sector becoming 4%, 5%, 6% of GDP. What's happening to the rest of the economy? It's becoming 96, 95, 94% of GDP. We've got to get switched on to this now. If we want to have a chance of tackling any of the other big social issues, you've got to figure out the money issue.
The poorest in the world pay for crises, even when they've not benefited from the often reckless and speculative booms, like the housing boom in Ireland that preceded that crisis. Over the last 30 years we've seen income differentials increase, so that the rich have got much, much richer. And ordinary people haven't. They've stayed the same, or they've got poorer. And one of the ways that the economy was kept going was by providing cheap credit, was by providing debt to those very people who couldn't really afford things anymore. So they kept buying. And when it collapses, it's those same people that have to pay once again, even though in many ways they were the victims the first time around.
As a result of the crises, the Bank of England has bought corporate debt and repackaged it at lower rates of interest. Yet the average person is being asked to pay more than ever to borrow on overdrafts and credit cards.
Debts between the very wealthy or between governments can always be renegotiated, and always have been throughout world history. They're not anything set in stone. It's generally speaking, when you have debts owed by the poor to the rich, that suddenly debts become a sacred obligation, more important than anything else. The idea of renegotiating them becomes unthinkable.
The way in which you can look across Europe now and see that the new Prime Minister of Greece, not elected, essentially imposed, Papademos, former employee of Goldman Sachs, the new Prime Minister and Finance Minister of Italy, Mario Monti, former employee of Goldman Sachs, the new President of the European Central Bank, former employee of Goldman Sachs. It's quite, you kind of see these people popping up absolutely everywhere.
That's the way to change what we have. Take all power and all freedoms away from the people and collect everything into the hands of one small group with absolute power.
From the people, without the people, against the people.
What's been interesting out of all this, I suppose, is the question of democracy that's been opened up very starkly in Europe, that you have a government of bankers essentially imposed on you. It's bankers who more or less got us into this mess, to put it rather crudely, but that's a good first approximation to it. And then you say, okay, bankers are the people who are therefore going to get us out of it, and incidentally they're going to run your country now. There's a serious question of democracy that's opened up here.
By the way, the banking crisis drove more than 100 million people back into poverty. The mortality statistics of people who go into poverty rise hugely for a whole range of reasons. So the banking crisis isn't just about becoming poorer, it was about killing people as well. And guess what? We haven't really got to the bottom of it. We never held anybody to account, and we haven't done the radical reforming job that we really needed to do. because we mistakenly thought if we destabilise the position any further, it'll make matters worse. And guess who took the decisions? All the people who were there in the first place.
During the long phase of commodity money, the exchange rate would depend on the amount of gold, silver, or copper contained in the coins of each country. Similarly, after the advent of paper money and the gold standard, the exchange rate depended on the amount of gold a government promised to pay the holder of the banknotes. These amounts did not vary greatly in the short term, and as such, exchange rates between currencies were relatively stable. After the Second World War, currencies were pegged to the dollar, and the dollar was backed by gold. This system came to an end in 1971.
So, we have a modern financial system where money is now chaotically organized. There is no exchange rate because there's no gold standard system to sustain. So we don't need it. In fact, we believe the market will resolve all of the problems of exchange. Whether your currency should be worth more than mine is a reflection of your economy relative to mine. And if that changes, the currency and the exchange rate can change. And if we need that to happen, it'll happen magically by the efficiency of market and profit seeking, and you guys know the rest, I think.
I think it is a form of economic warfare. Much of the change in the way that the global economy works over the last 30 years result from this debt, this third world debt, because it's given rich countries and banks and the financial sector enormous amounts of power and control over the poorer bits of the world where a lot of the resources are that we like using. And that's been used in a way that many people have compared to a form of colonialism. I mean, it's a very real, direct form of power that's been used over those countries to force those countries to do what are really in the interests of the richest segments of the world that they do. And as a result of that, not only have corporations become absolutely, made huge amounts of profits and become absolutely enormous and all pervasive, but the financial sector has become even bigger than that. And the real money in the world to be made today is not by producing anything at all. It's simply by forms of speculating, basically making money from money. That's the most profitable and by far and away the biggest form of activity, of economic activity that exists in the world today.
To protect themselves, vulnerable countries need to accrue currency from rich countries who create these currencies out of nothing.
The Netherlands' first Governor General of Indonesia, the man who built the trade routes, fortified them. What I mean by that is built forts along them and fought Spanish fleets and British fleets, said about the development of the Netherlands Empire and Netherlands trade was, we cannot make trade without war, nor war without trade. Money and power. So reserves have become the way in which you can insure yourself against what? Speculation. You said speculation. Speculative attack. Fall in the markets. Bubbles.
When a country succumbs to a speculative attack, it is asked to deregulate its markets and conform its financial system to that of the dominant party.
The big problem that's faced by most developing countries who got into a debt crisis was that they were told by the powers that be in the world, the International Monetary Fund, which is in many ways governs the global financial system, that the way to get out of debt actually is first of all to restructure your economy, especially to increase your exports so you're earning more dollars, and then you can pay off your debt, which is normally in dollars or some other foreign currency. Unfortunately, time and time again that was proved to not be the case at all. Actually, countries cut back their public spending to the bone, so they stopped growing, they stopped having any potential for growth, and what they did produce was aimed at the export market, was aimed at creating dollars and so on. So they were paying off their debts, but they weren't developing their own economy at all. They were paying far more in debt repayments than they were spending on health or education or anything else, and their debts just kept getting bigger and bigger and bigger.
The country becomes a vassal state, allowing large corporations to exploit its natural resources and workforce.
It's not even shadowy. There's no great mystery about what's happening here and about the way the world operates. It's quite blunt. I mean, for the last 30 years, you've got something pretty much everywhere, well, it certainly spreads pretty much everywhere, that generally gets labelled neoliberalism, this idea that you should have floating exchange rates, weak regulation, particularly of financial markets, minimal government interference or involvement with what market does, and that's more or less how the world operates. And then there are institutions, and the outstanding one at this point is the IMF, that will actively try and enforce this state of affairs. So it's not greatly shadowy, if you see what I mean, that there are people behind the scenes somewhere trying to manipulate stuff. It's actually, this is quite overt. This is happening, and this is how, for my entire adult life, actually, is the way it starts to look like. This is how the world has operated, and it's made some people very, very wealthy. It's produced enormous concentrations of wealth.
So when the International Monetary Fund comes in order to try and alleviate a country's debt problems, it imposes a set of conditions. And in the 1980s and 90s, they called that set of conditions structural adjustment programme. And it tends to take very similar forms wherever it happens. And indeed, we can see structural adjustment programmes, in essence, happening today in countries like Greece and Portugal and Ireland, where countries are instructed to decrease the amount that they spend on the public sector. They are instructed to liberalise their trade market and liberalise their capital market, so money can much more easily come in and out of their economy. And the idea is that this will encourage investment to come in from richer parts of the world, and that all of their problems will be solved from this investment. And in actual fact, this has proved time and time again to be completely without foundation. In actual fact, what happens is it destroys fledgling industries and capacities in these developing countries, and developing countries become completely dependent on goods and services from developed countries, and also from capital from developed countries. One of the things the International Monetary Fund is very keen on is telling countries to lower the taxes that should be paid by multinational corporations when they come and operate in a country, because then you'll encourage more multinational corporations to come in. Of course, what it also means is the profits that are made by those multinational corporations leave the country just as quickly, and the country itself doesn't benefit. And today you have many developing countries which have got almost no tax base. They've not developed a tax base at all, and so they're even more dependent on international capital markets, on the money markets, on creating debt. And that's why you have so many countries in the world that have really been robbed of their sovereignty. It's very difficult to see how democratic societies can evolve or function when actually a government is more dependent on the diktats of the International Monetary Fund and the money markets than it is on their own people.
So what we're left with is a financial system since the early 70s that has no fixed exchange rates, that suddenly has increasingly open financial borders, that has central banks having to manage without having any control because there's nothing here where the gold used to be. Chaotically, they have to ease quantitatively. They have to lend as a lender of last resort.
Throughout history, monetary systems were designed to give the dominant international power an advantage, and this power is fiercely defended and expanded on.
And they flee in terror from an incredible bogeyman.
An American flag is burned at the height of the demonstration. Both President Johnson and Francisco Franco were vilified. A new low in public protest added strain on Spanish-American relations.
Order in the court! Order in the court!
I want Americans and all the world to know.
Come on, fire!
I want Americans and all the world to know. America has no regard for conventions of war or rules of morality.
What I would like to see is a new kind of currency that is backed by something that is scarce and that we really need and we really value, something like energy or renewable energy, for example. So a sort of kilowatt-hour backed currency would be very interesting to me. We need to start valuing the things that are most scarce and that we need to survive as a human race in the long run, and backing an international currency with something like that will generate enormous investment in, for example, renewable energy, if that's the primary international unit of account that's being used. Another option is a basket of currencies, so you mix up the value of different currencies to create a very solid currency that people have confidence in.
Perhaps even better would be a basket of commodities with which to back up international currencies.
Now, if it was possible, internationally, some way or another, to get all these competing and increasingly competing national economies together and say, we're all going to sit down and write out an agreement, somewhat like the Bretton Woods Agreement, which will allow for, unlike Bretton Woods, allow for some currencies to be pegged against different baskets of goods that are more appropriate to their national economies. And you can sort of arrange this. If you could arrange that to happen, then that would be nice, and you can see how that would start to create a kind of order in the international macroeconomy, which is otherwise lacking. The real difficulty there is just political. It's like, who on earth is going to do this? Who is the force that's going to kind of make this thing happen?
Creating a monetary system which is both fair and stable is possible and can be achieved. What are international organisations for, if not for such a purpose? Banks' balance sheets are now 4 times GDP at £6 trillion. They are holding the public hostage. Their wealth has become so great through gaming the financial system that we are at a tipping point whereby a single bank could now take down the entire economy.
We can't let the banks go back to business as usual, because if they do, then all we're going to see is more debt, more poverty, more inequality, and another crisis in 5 or 10 years, which we're going to have to pay for again.
It is a political issue, ultimately, because the reforms that are required can only be achieved by Parliament. We don't need a very big act of Parliament. All it has to do is basically prevent the clearing banks from creating currency based on the debt of their borrowers. That's it. You cut that. You stop that